I find it interesting that when we talk about the markets, right?
Hmm.
Investors right now, mom and pop, are now all in on stocks. And in fact, let me give you some exact numbers here. The institutional investors have been selling stocks almost every week since 2025. Those would be the very, very wise hedge funds and big, big, big money investors. As an example, if you look at, they're the second and third largest shareholders in Nvidia. They're board members. Well, the second and third largest investors in Nvidia just dumped 194 billion worth of million worth of stocks last week at the same time. Their board members, they dump, but keep that in mind. So institutional investors have been dumping stocks every week in 2025. Since the first week of June, professional investors have sold 4.2 billion in equities. The 4-week moving average of selling is 2 billion per week. So you have insiders dumping stocks. At the same time, the U.S. households, through mutual funds and pension funds, their financial allocation to stocks hit a record 53%. It's larger than the dot-com bubble, which was 51. It's the largest allocation by the retail public to equities ever. And so when you talk about insiders, people in the know, dumping, and the public running in, what could possibly go wrong? Now let's look at it in terms of precious metals. Same thing is happening in reverse. You've had the largest deliveries in the history of the COMEX, month over month over month over month. The May contract was the largest delivery ever in the history of COMEX in both gold and silver. These are the very knowledgeable investors. They're the wealthy ones, but they're the ones closest to the information. Who is taking possession, for example, of 8.5 billion worth of gold in May? 5 billion nearly in March. Who's standing for delivery on all this? The largest silver delivery ever in the history of the COMEX. At the same time, I've been saying on all the shows I'm on, where's the public buying metals? They have gone headlong again, as this statistic is telling you, into the risk on trade again. The 7 stocks, they've run back into them at the same time as the insiders are running the other way, waving at them. Thank you for taking my shares, goodbye, and run out the door. So the insiders are selling equities and buying commodities and standing for delivery, as the public has shed commodities and is running headlong into the burning fire that is the equity market. Now, what could possibly go wrong there? This, again, will just foment the divisiveness that this country has been engulfed in over the last 4 years, and it's not a good thing. Really isn't. And I think it will only get better, or worse, rather. This divisiveness will only get worse. And you know, the people like me and you who have been mocked as crazy for owning gold for all of these years, it's now become the second largest world reserve asset, surpassing the euro at the central bank level. The smart money, the big money, the money that's closest to the information is now accumulating gold at a level no one has ever seen before. And the interesting part is removing counterparty risk, whether it be standing for delivery off of COMEX or the LBMA, getting it off the exchanges, or the 40 central banks that have requested delivery from the New York Fed or the Bank of England, the traditional safe havens that gave access to the LBMA and the COMEX, or in this case, the opposite in the equity market, selling as the public is buying. Public's nowhere to be seen in the retail market in metals. It's the ultimate contrarian indicator. So yeah, I think things are about to get very interesting, and the war is a sideshow to me. I think the war is over. I truly do. I've been following it very closely. The Iranian ability to do anything at this point has been neutered. There's a wonderful station called Tousi TV, Tousi, I believe, who has done an amazing job of showing what's been happening step by step by step by step. But I think it'll be over very soon. I do. Hopefully there's no more bloodshed. But, you know, again, you see war in the Middle East, you see war in the Ukraine, you see craziness. You see, you know, mixed feelings on both. And again, just more and more divisiveness. So the guys' name are Mark Stevens and Tench Coates, second and third largest individual shareholders and board members. dumped a combined 194 million worth of Nvidia shares at the same time. Anyways, so yeah, this is a situation where things are getting nuts. You look at the Treasury market. The U.S. Treasury bought back another 10 billion of its own debt, matching its largest Treasury buyback in history, which was done 2 weeks ago. So they're buying back 10 billion of its own debt, long-term duration debt, and they do that by selling short-term to finance the buyback of long-term, because there's no demand for the long-term. It's the same reason the Fed had to come in 3 weeks ago and buy $50 billion nearly of a sampling of 3, 10, and 30-year treasuries. There's no demand. They're trying really hard to not let interest rates spike. But, you know, that's what we see happening. That's a loss of confidence. Who the hell wants to buy our treasuries? We're inflating away our problems. We want to raise the debt ceiling. We have another $2.5 trillion on this year's deficit, and yet this comes in the face of Doge, where $900 billion was saved. Right, that's what they saved. Yep. That's 37 hours worth of government spending. That's it. So you know, the whole thing is crazy. And only getting worse. So the reason that it's going up is that there's more demand than there is supply. But I would say that if you go back to Wednesday, the silver market traded 487 million ounces of paper silver. And then on Friday, 356 million ounces. This is all done to hold the price below 37. And it's the second largest short position by the commercial banks. These are the ones that are financing the companies like BlackRock, the ones that own all of the military contracting companies that are making the high-tech weapons. You have the second largest short position in the history of the COMEX market ever in silver right now.
That's huge.
And it's still going up. What does that say to you about the strength? They are being challenged by the biggest money in the world, by the Indians, by the Russians, by the Saudis, by the Chinese. Their sovereign wealth funds are saying, nah, it's okay, we'll stand for delivery. We don't care if we have 12 margin calls. We're going to stand for delivery. We have more money than you do. We're going to stand for delivery. That is the difference, you know. And so let's take a step back and look at what the ECB, the European Central Bank, just said publicly last month. The ECB warned of increasing counterparty risk in gold derivatives for the euro area. In the May edition of the Financial Stability Review, the ECB added that a significant share of these gold derivatives, and you can add silver into that too, were over the counter and not centrally cleared. That means they were traded in London and not traded and COMEX, which is centrally cleared. The over the counter would be the way that the LBMA is. It's an over the counter market, peer to peer in essence. There's no central clearing authority like there is at COMEX. The big point to take on board is an official recognition that stand for delivery obligations on COMEX are behind the crisis. They continue. Since November, warehouse stock, nadir 26,470,000 ounces have stood for delivery in gold. Eurozone banks have swapped their gold for paper, and the gold is disappearing in deliveries. Behind the ECB's public concern is a far deeper one. It is as close as we can get to an official warning that the gold paper game is coming to a very nasty end, likely to drive gold measured in paper currencies far, far higher. Incidentally, the same problem exists in silver without central bank participation. So this is exactly what you have. You have a situation where forever these banks, these exchanges in the West and the banks that traded on them were able to hold down the paper price because no one stood for delivery. Nobody did. Less than 1%. And now, all of a sudden, whether it be in London, even in Shanghai, and in the United States off of COMEX, the deliveries are exceedingly massive. And these people are freaking the hell out.
What happens if that cannot be fulfilled anymore?
Then you get a delivery failure and a run on the exchanges. It's the same thing if your bank says we don't have any money for you, and that gets out on the 6 o'clock news. First thing tomorrow morning, everyone's going to be at the door. Give me my damn money. And it's the same thing here. In 2000, when gold was $252 an ounce, or even $274.50, it was $252 in 2002. But let's just go to the beginning of the century. $274.50 was the price in January, I believe January 1st, or in early January. So if we take those same 122 ounces times 274.50, you get 33,489. So 25 years ago, those 122 ounces were $33,500. Today, it's 417,000, and it's earned nothing but dust for 25 years. It's outperformed almost every asset class while removing all counterparty risk in your possession. And I would say to young people out there that the same opportunity exists in silver right now. A few 1,000 ounces of silver in 20 years may buy you a house. That's no more crazy than saying the same thing about gold 25 years ago. And I think that there's a lesson to be learned there. When we see the largest delivery in the history of the COMEX market ever happen in the May contract, but massive deliveries happening every month over month over month, and China, the second largest producer in the world, flying throughout Latin America, buying concentrate and doré from the miners directly, shipping it back to China and refining it because they want it so bad as the second largest producer in the world. What does it tell you about the value of silver? Why are they holding it down so much? Because it is not an industrial metal. Sure it is, but it is far more strategic than it is industrial, as it is disappearing in nature because it's used in industrial applications like bombs or solar panels, or the computer you're talking to me on has probably a fifth of an ounce of silver. Now, does it make sense to smash that computer apart and pull out a fifth of an ounce of silver to recycle it? $6 worth of silver, it's not even worth the manpower to do it. So, the point of it is that silver, all the silver used in industry is gone. It's a depleting asset.